Good morning, everyone. Thank you for joining us today. It's great to see so many people joining in the lobby, keen to hear more about what we've got to say on AML. So a warm welcome to you all. My name is Jamie Royston-Smith. I'm Senior Account Manager at TaxCalc. So I look after some of the key account partners and networks at TaxCalc, and I've been with the business just coming up to 10 years. So yeah, very much at the coalface in terms of speaking to practices every day and the challenges and hot topics that they face. I'm also joined by my colleague Melanie Rollison, who's our customer success manager, looking after our kind of customer training and customer onboarding. Mel, would you like to say hi and introduce yourself and your backgrounds?
Yeah, hi. My name's Mel. I have been with TaxCalc for nearly a year now. Previous to that, I was in practice. I had my own practice for 13 years, and I am at the front face of basically anything to do with AML, and I'm very interested in this due to some experience of being audited myself, which we can talk about as we go through the slides, I think, Jamie. But yeah, my role is customer success manager, so I've probably spoken to a number of you already, and I look after training, onboarding, talking to new customers, and making sure that everybody is using TaxCalc to their best ability.
Brilliant, fantastic. Yeah, your insight and your first-hand experiences will be really useful, I'm sure, as we unpack the content. So in terms of format today, it's very much educational, but with reference to how some of TaxCalc's AML solutions might help lift some of the burden of the guidance that we're going to share. And we should state that whilst we're not AML experts ourselves, with years of training on the topic, we couldn't necessarily answer specific situations, but in our roles, we both need to be aware of the legislation and what the latest money laundering directives are. And so we're very much at the coalface listening to the challenges that practitioners face firsthand. And our aim today really is to take some of the resources that are easily available online for the profession, but deduce that down into some actions and quick wins that you can take away to improve your AML coverage. So we'll get on to what those are in a second. So please feel free to use the chat box for any questions or comments, but we're not planning a time of Q&A this morning. We will try and answer some questions if we know the answer. So if anything comes up that you would like a bit more information on, or you've got a comment on, then please feel free to submit it, but we're not necessarily guaranteeing that we'll answer that today. But what I will share at the end of the presentation are two resources for further reading, which we have used to prepare for the webinar today. And one of these is the CCAB guidance for the accountancy profession, compiled in conjunction with all CCAB members, plus additional smaller institutes and supervisory bodies, including HMRC. And also the ICAEW's 2020 report into AML, which includes conclusions from the inspections conducted of its members. And we've used some of the same guidance and methodology to develop our own AML products and services. So when we reference certain aspects of these publications, we'll aim to show you how we can help kind of tick that box by using TaxCalc or one of TaxCalc's solutions. And why are we running this webinar now? Well, we've noticed amongst our customers an increase in spot checks and inspections, and we do believe there's internal pressure from professional bodies right to the top of the governing bodies to effectively inspect members on a more regular basis, or to I guess clamp down on fraudulent activity in the economy. So it's a hot topic at the governmental level all the way down to the firm level, and we believe that therefore is impacting how practices operate day to day. And as I say, we want to highlight some areas of non-compliance that were identified by this ICAEW report. So we'll give you some recommended reporting and recording, which we believe should help with any further future inspection that you may face. And Mel, I believe when you were in practice, you had an inspection at one point, didn't you?
I certainly did, yes, Jamie. I was quite new to practice, and I had the pleasure of the ICAEW ethics department coming to audit me. And that was a good 10, 12 years ago. And it involved them coming to my office, which was actually a bedroom in my house, and going through my filing cabinet and checking for all of the documentation that that I had for all of my clients. And then obviously I had some follow-up to follow up on, which it was quite a scary moment. It was fine, but I think the aim of the game this morning is to basically make people sleep at night and not have to
Yeah,
go through such a scary experience. Yeah.
absolutely. Okay, well, without further ado, we'll introduce some of the key processes. So the key stages of client due diligence we want to cover today are identification, risk assessment, and verification. So we'll unpack that a little bit in just a moment. But before we do, one of the best places to start is to conduct a firm-wide risk assessment. So in the ICAEW's 2020 report on AML, our most common significant finding was a lack of firm-wide risk assessment or significant issues with the quality of the risk assessment. So that was their main call out from that report. And essentially, a firm-wide risk assessment is a good place to start because then it helps identify and determine the risk levels of concealing money laundering activity via your services. And that will be different for every firm based on the types of clients and the services that you offer. So in terms of what a risk assessment looks like, it follows the pattern of a client risk assessment. So when we look at the client risk assessment later on, you can use the same stages that you would use to assess the client risk, and you're then effectively using similar topics to then assess the risk of your own firm. But it's asking the questions of what activity do we conduct that therefore may and the risk associated with that. And off the back of that, you should then prepare your policies and procedures around AML. So you shouldn't just use cookie cutter or templated policies and procedures, although many firms do, because they do need to be quite rigorous and extensive to cover all sorts of situations. But really, the firm-wide risk assessment should be the driving force for the policies and procedures based on your findings. So we'll touch on that in a little bit. For example, TaxCalc's firm-wide risk assessments will help you review the risk assessment questionnaire that gets used for clients. But instead of thinking about the client risk, you're actually thinking more broadly about the potential likelihood of an event happening and the risk score or impact associated with that occurrence. So, for example, if you take engaging in a new business relationship as a part of this process, hopefully that will be a common occurrence. So you need to explain in your risk assessment that engaging in a new business relationship is going to be common, but then the risk associated with engaging in a new business relationship is potentially low to medium, or whatever risk you associate with that. Of course, it doesn't come completely risk-free because it's a new business relationship, but you really need to identify what that risk is for your firm and go through the questions. And then off the back of that, you need to identify the mitigation steps that you will take within your policies and procedures if you identify something that's high risk or a client that's high risk. So we'll show you what the firm-wide risk assessments look like in TaxCalc. So I'm going to bring up a copy of it here. So hopefully this is familiar to many of you. And I'm going to hand over to Mel to introduce us to the firm-wide risk assessments and what that looks like.
Yeah, so if we open up the firm-wide risk assessment, and this is something that, as Jamie has mentioned, has been highlighted by the ICAEW as being one of the key things that practices haven't been doing. And yeah, so there's an area that just needs completing within TaxCalc. First of all, you identify the risks behind your client. There are some standard questions, and within TaxCalc, we do allow you to amend those questions so that they are specific to your practice. I think we won't go through every single question here, but you can just have a look. You can look at whether the client is a new business relationship, and you can give them an identified risk score. And literally go through every single question within the risk assessment: geography, products and services, transactions, and delivery channels. Now, if some of those come up as high risk, we then give you a risk mitigation area where you can complete the areas and just describe how you are mitigating those risks. TaxCalc will then give you a conclusion and a risk summary, and it will give you a report which you can save down and update as and when your firm requires you to do so.
Yeah, perfect. So it can be printed there, can't it, in case it's ever required. And yeah, in terms of review points, I think TaxCalc also gives you the opportunity to set a review point by adding a task in to conduct that firm-wide risk assessment at another juncture. But in terms of when you should do that, I think annually is probably a good place to start, although I don't think the rules are prescriptive. So yeah, we'd probably recommend an annual firm-wide risk assessment. And I'm pretty sure that you can use the basis of your first firm-wide risk assessment and duplicate that and effectively use that to create your next one. So if nothing's changed too much, then you won't have lost all that work and you won't have to retype it all in again. Okay, so let's go back into the next area we want to cover. And really, before we go into each of these three key topics, want to discuss the importance of evidential records within this process. So it's not just good enough to say that you've completed these three stages of client due diligence, and much of the rules do centre around creating good records and audit trails of this completion. So looking at the guidance, CDD should normally be completed before entering into a business relationship or undertaking an occasional transaction. The 2017 regulations do not specify the medium in which records should be kept, but they must be readily retrievable. So thinking about how we can take away additional workload and burden for you, the practitioner, how can we ensure that these stages are completed in a timely way, but also creating the relevant records and reports so that they can then be easily or readily retrievable. And of course, a piece of software is typically a fantastic way of doing that. So let's touch on identification. Sometimes this is known as KYC or Know Your Client. One of the call-outs from the ICAEW report was as follows. Unfortunately, few firms still seem to believe that CDD just means checking ID, such as passport or photo driving license. However, it must also include gathering information about the client to allow an assessment of risk to be done. This information is sometimes called Know Your Client and will include the nature of what the client does, how they do it, their legal form, where their funds come from, and who the beneficial owners are. So yeah, unfortunately, it is just a bit more than taking ID documents down. So you can see based on the questions on screen, these are the sorts of areas that you should cover. Who is the client? Who owns, controls them? What do they do? What is their source of funds? Can you describe their activities? What will you be doing for them? And what is their legal structure? Now, based on your policies and procedures, which of course will be different for every firm, you may not need to go into every single area for every client. So if you deduce already that you think this is a fairly low risk client or a fairly normal risk client, then you may not go into every section in here. But we do think it's good practice to basically follow all of these key areas, because yeah, you never know what could be uncovered later on down the line when you do the risk assessment or the verification. So we do think this is a really good place to start. And again, we'll jump out of here and look at the identification questionnaire in TaxCalc. So I've got one open here if you want to talk us through that, Mel.
Yeah, I think the key point to mention here is that you can open up any client of yours and go into their identification stage of the AML Centre. This will bring in all the information that you already have on that client, so there's no duplication of keying in the records, which is quite nice. So you can see their address is already pre-populated, their national insurance number, etc. And then it basically goes on to identity evidence, and that's where you can add in a scanned copy, as Jamie said, of passport, driving license, bank statement, etc. And then down the left-hand side, if you just carry on, it will talk you through anything you know about your client. So as Jamie said, it's best practice to just typically type in as much as information as you know about your client. So for this guy, we've said he's a self-employed builder. You can mention any source of wealth and funds that you know he has. And then there's a part on relationships. So within TaxCalc, if he is a director of a limited company, that will be pulled in, and you can also bring up anything else that you've got in terms of his relationships, because you've obviously got to look at the whole self when you're checking an individual. And then obviously anything to do with PEPs, politically exposed persons, will come through. And it will give you a conclusion and an identification profile, and it will give you a report.
Yep. It's all about building up a whole picture of the person, isn't it? And that's why the relationships part is key. You might have a spouse you need to factor in terms of the identification process. So rather than creating different records, this all brings it into one place, really. So yeah, off the back of this, you might find that you want to do enhanced due diligence. So TaxCalc does give you a few pointers of what you can do next to take some actions there. But essentially, again, creating a nice report that can be used should it ever be required. And one more thing in here, we'll come on to this later on, but you can also run an electronic verification through here. So yeah, that's where you can run an electronic check to verify, I guess, that yeah, the person is who they say they are. Whilst it's probably unlikely that the identification documents are fraudulent, there might be some other background information that you want to take into account before you act for that client, such as, are they a PEP? Are they on a sanctions list or a watch list? Do they have CCJs and things like that? So that's what an electronic verification will look at, and we'll come on to that later on. So you can run that from within the identification questionnaire, which might be a good place to do it, because it might be a good opportunity to do it on every new business client that you win. Okay, let's go back to where we left off. Anything else to add there, Mel, before we move on?
I don't think so. No, I think that's pretty comprehensive. Yeah.
So the next area is risk assessment. So we've already discussed firm-wide risk assessment. This is now the risk assessment required on an individual client basis. And these are the key areas that you would cover in a client risk assessment. So client risk, service risk, geography risk, transaction risk, and delivery channel risk. So pretty comprehensive. Again, we do recommend that you do complete all stages of this. And this is where software is potentially helpful, because it just means you don't have to think about, which areas you do and don't cover. And we would recommend that you cover all of these areas. And just before we move on to look at the risk assessment, the templates can be tailored. So let's say you want to create a risk assessment template for one sort of type of client. You can effectively remove a bunch of questions that are perhaps not applicable to a low risk client or to a private individual, and you may then ask further questions or more questions using another risk assessment template for a business client, which may be higher risk. So again, let's take a look at the risk assessment for a client. So if we pick this one here, and again, Mel, would you like to talk us through this?
Yes, fine. I mean, this will, if you just scroll down, so you can see that TaxCalc will pre-populate the key areas, so all of the fields don't have to be rekeyed in. And then there are, as Jamie said, a list of questions which you can tailor to your own practice. And you can give your client, as you can see, it asks you, for example, is your client a new business relationship? You can then just score it yes, no, not applicable, and go down every single question. And there's questions surrounding clients, geography, products and services, transactions, and delivery channels, as Jamie mentioned. If it does come back with a high risk, then you can then talk about how you mitigate the risk, and you can start an enhanced due diligence as required.
Yeah, and typically what I would expect a firm to do, you would probably have one of your client admin or staff or whoever's involved with the onboarding of the client in TaxCalc to actually complete the risk assessment. There's no reason why, with the training that's required for staff on AML these days, that they can't answer these sorts of questions. And then you, as perhaps a senior or the money laundering reporting officer in the practice, will only need to get involved if something comes out as high risk. And then there's an opportunity to mitigate that risk and do an assessment of why you think it's okay to act for this client despite the high risk, and perhaps some additional measures that you'll put in place to just make sure that there's nothing untoward with that client. I didn't show this earlier, but if you want to look at what the methodology is in terms of the scoring of the risk assessment, then you can get that information by clicking this link, and that will then show you how it's calculated. This uses industry best practice. It can't be adjusted, so whilst you can add or remove questions from the risk assessment template, whatever questions you do have in there will come with kind of best practice ready-made risk scores built in, so you don't need to work that out for your firm, etc. So yeah, I hope that's useful. Let's carry on. And next up is verification. So verification, is an important step. If enhanced due diligence is required, an electronic identity check can support and corroborate the information that you have gathered. Now, it might seem like a circular argument, but you obviously conduct the identification review first, and then based on that, you take decisions on what documentation is required and what checks are required. So it seems odd to do this at the end of the process as well, but really realistically, you'll be doing this all along. So you will decide based on your policies and procedures whether something like electronic verification is required or a good practice. And we think it is, at least for new business relationships, and also for firms that may be completely online, which of course is not as uncommon nowadays. So now that many firms may be operating remotely or working from home, or perhaps decided to become officeless altogether because of the COVID pandemic, then of course there may be more instances of operating entirely with clients online, and therefore if you're never meeting them, it's probably good practice to not only capture the identification documents, which of course is recommended for all clients, but to do that verification on them. And of course, in terms of what electronic verification does, it's going to check whether they're politically exposed, any CCJs and sanctions lists and watch lists. And there are a range of providers out there that do these electronic checks. Again, TaxCalc can offer that solution to you with a company called Equifax, big data provider in the world, worldwide global data partner. And that information therefore can track people who have moved around, been previously lived abroad, or have international connections. So it's not just for UK individuals. In terms of how you run these sorts of checks for companies, whilst we don't do any checks on the company itself as an entity, typically it's recommended that you run one electronic check on, let's say, the beneficial owner or the majority shareholder for the company. So you might do your risk assessment and your identification for the individual, for the director within TaxCalc, and also for the business, because you can create them for the business as well. And then also create or do an electronic verification check on the beneficial owner or the majority shareholder of that company, just so you've got that additional background checking there. And unfortunately, there's not really anything we can show you in TaxCalc this morning because it's a live system, but just to show you can run electronic checks in multiple places. One of them is within the identification questionnaire, which we saw earlier, but in addition, you can also run it from within the individual client itself. So if you open up a client record, you've got anti-money laundering, verification record, and other events. And again, it's the same screen where you can run the AML check. And you also get copies of their latest identification and risk assessments all in one place. So if you're, rather than going through the AML Center, if you just want to look up the client in your main client list, you can then see all the AML documentation you've got prepared for that as well. Would you add anything, Mel? Is any?
No, I don't think so. I'd reiterate what you've been saying, Jamie, in that all the practices I've been speaking to recently have been asking about verification and verification checks, and it seems to be a very hot topic at the moment. So yeah, it's something that if I was in practice now, I would definitely make sure that I had in order, I guess.
Yeah, thank you. I've actually been monitoring some of the questions that have been coming in. We're unfortunately not going to be able to answer all of them today, but if we can find an answer post event, we will see if we can get that for you. Of course, we do have other people in the business who specify and build the AML products and maintain them. So we do have the expertise in the business to potentially answer them. But yeah, unfortunately, we might not be able to get around to all the questions today. But one of them that's definitely stood out is around frequency of review points. And so we're going to touch on, first of all, ongoing monitoring. And just reading some of the guidance, established business relationships should be subject to CDD procedures throughout their duration. This ongoing monitoring involves the scrutiny of client activities to make sure that they're consistent with the business's knowledge and understanding of the client and its operations and the associated risks. So there is a requirement to check this, but again, the guidance isn't necessarily prescriptive, but does give you a few scenarios in which this should be a review point, and these are typically event driven. So if there's been a change in the client's identity, a change in the beneficial ownership of the client, a change in the service provided to the client, and information that is inconsistent with the business's knowledge of the client, as I just read out. Again, TaxCalc AML Center allows you to create a task in TaxCalc to review this. So every time you want to create a review point, you simply go into the AML module. And probably the main screen to look at is this list here. And it's this button on the right hand side, isn't it, Mel, where you'd click create task and then create the review point. So you can select what type it is. So if it's a risk assessment or identification, and that you want to do it on a certain date, so we'll pick next year. And then it works out, it's an annual recurrence, it knows who the client is, and so you just set it up like that. And TaxCalc will then remind you to do that each year.
And I think it's worth mentioning, Jamie, that TaxCalc does date stamp it, as I understand it, so that that you've got that record of when the last review is done. If anyone was to ever come and investigate your clients.
Yeah, that makes sense. So I don't think you have to do the whole 3-step process each year or at each event. But it will be dependent on your policies and procedures. So whatever you identify from your firm-wide risk assessment as being a logical time frame to do these review points will be then what you should do. And if nothing happens to the business relationship, or if there are no events which dictate a new review point, then just carry on as normal. But again, yeah, it's totally dependent on the firm and the risks associated with that. So I'm sorry we keep repeating that, but it really is dependent on your setup. Okay, next we'd like to touch on training policies and procedures. So there's ongoing requirement that staff training is effectively undertaken, but also records of that staff training should be kept so that it can be demonstrated that staff training did go ahead in an inspection. And also policies and procedures should be readily available for your team. It's not only for an inspection, but also so that your team know exactly what your procedures are. And again, TaxCalc gives you a space to do that, so you'd be able to record the staff training that has been undertaken, and also policies and procedures can be accessed by the team. And if they ever get updated, then that also pings a notification to all of your staff members to say that a new set of policies and procedures has been uploaded. And finally, suspicious activity reports. So we're not going to touch on necessarily the definition of suspicious, but effectively we do have a bit of information on screen from the guidance. So an example there is a suspicion that someone has failed to declare all of their income for the last tax year, and therefore, yeah, that's suspicion. But the purchase of a brand new Ferrari by a client's financial controller is not in itself suspicious activity. So yeah, you do need some sort of evidence around that as well. And again, suspicious activity reports can be created. So we'll just show you that. So yeah, this is your log of ones that have been raised. So this would be only open to the money laundering reporting officer. So if you actually wanted to create one, if your staff wanted to create one, they would typically go into the client itself and raise it from there, wouldn't they, Mel?
Yes, they would. Yes, and yeah, again, it will take you through. TaxCalc will guide you through some questions to complete. Yeah, if you just carry on clicking down, you can see that the boxes are pre-populated, and then you just need to fill in as much information as you can in these boxes with the evidence that you have. I think it's worth mentioning that when I was in practice, we had one client who we noticed on a bank statement had transferred a large sum of money over to Chile. So I did actually use TaxCalc myself to raise a suspicious activity report. So it's a useful record to have, and you can then send it off to the National Crime Agency.
Yep, and just to add, you can't. There's no inbuilt filing mechanism to do that, because there's no such no such tool that we can build into the software. But it does link you to the National Crime Agency reporting website directly, so that you can report that. So you just click that link there, and it takes you through. Then you'll get a reference number, and that should be entered back into the record here. And again, yeah, it creates a report that you can then use for any sort of inspection or spot check later on. Okay, so yeah, a lot to cover, and hopefully it's fairly obvious what some key actions would be going forwards. Of course, the guidance is quite extensive, and we couldn't possibly hope to make you completely AML compliant just off of this one webinar, but we really wanted to give you what we think are the 3 key areas you need to conduct for each client, and a couple of other call outs there. So in terms of the products shown today, the first one is AML Centre, which comes in at just £80 a year for 24 clients, but then scales up depending on how many clients you look after. So a sort of mid-sized firm, sort of 250 clients, I think, is around about the £200 mark annually. So it scales up, so you don't have to pay more than you'll need it for your number of clients. And just to recover what it allows you to do, firm-wide risk assessments, which was the starting point of our guidance, to conduct one of those. Then off the back of that, create your policies and procedures. You'll need to source those or create those yourself, because again, it's firm specific. We really don't want to provide templated ones for that, although maybe your professional body may be able to help with that. Then create the key stages of client due diligence, so creating an identification and risk assessment record, and then also suspicious activity reports and a place to store your policies, procedures, and staff training. If you feel like electronic verification will be a good area to cover, then these searches start from £1.60 per search, So yeah, it's a credit-based system essentially, and as I say, partnership with Equifax, but it's built directly into TaxCalc, so you won't have to retype in the name, address, or date of birth or anything to conduct that AML search. And as promised, here are the kind of resources that we've used, both in preparation for the webinar, but also as methodology to create the AML products and services ourselves. And we've tried to deduce that down into some key takeaways. But as I say, they're rather big reports, a bit of bedtime reading. So if you want to access these reports, the CCAB guidance, the CCAB guidance. If you Google HMRC AML guidance for accountants, you'll go to a gov.uk page, which links you through. So it is actually kind of not necessarily prepared by, but backed by HM Revenue and Customs there as guidance for the sector. And the ICAEW report can be found by Googling the search term, the 2020 Anti-Money Laundering Monitoring Report. So you should find that with a quick Google search. And in terms of call to action, we do actually have a free trial of AML Centre. So if you wanted to turn it on 14 days, try it out for a couple of maybe new clients or existing ones, then please do contact your TaxCalc account manager. You can reach them on sales@taxcalc.com. And if you have some interest in the AML Centre or AML ID checks at all, then please do use the link there to communicate with us, and we'll absolutely get in touch to assist you with that. As I say, we're not going to have time to go into Q&A this morning, but there have been lots of questions. Some of them are quite specific, so if it's okay, we'll take those offline. We'll be able to look up your customer record if you are a TaxCalc customer, or if not, your email address from the registration today, and we will do our best to get through the questions. Some of them are probably too specific to provide an answer that will be useful to you, but absolutely we will try to answer them if we know. But yeah, just a dozen or so questions there, but we will try and get back to you in due course. But thank you everyone for joining. It's been great to see so many of you interested in this topic, and please do check out further communications for more webinars on other areas of the TaxCalc suite, but also other educational pieces on making tax digital, and other topics for the profession. So thank you everyone for your time, and I hope you have a lovely Friday and a fantastic weekend. Take care everyone.